Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elkana, along with Brianna Valesky. And we have Scott, Red Dog Redler, on the line. He is Chief Strategist at T3 Live and T3 Trading Group. Scott, how you doing on this Monday morning?
Feeling good, getting all prepped up and ready to go. How you doing?
I'm doing pretty good. Doing pretty good today. Well, let's just take a look. We'd love your thoughts on the overall market here. And big move on Friday. Boy, will we get the follow through today? We are getting the follow through right now. S&Ps are up 13 and a quarter. Is this time to chase the market here after that big day on Friday?
I think a lot of the traders that are coming in flat today are trying to figure out what do they have to do here. Like you said, we're getting some small follow through to Friday's reversal. I guess traders are trying to go a little step by step here, depending on your time frame. One question is, was the lows tested, and is there a successful bottom in? And if you look at the bottom of my note, because everyone loves to ask that question, I would say, 70% chance I think the lows are in, and we don't retest that area, going into the end of this year. Does that mean we make new highs? And as traders, obviously, we don't need to get back above 2,100 in the S&P in order to make money. The question is, where do we go? And I think for today, to get back to your question, I think some traders, buying the open up 13 handles, I wouldn't do. I would wait. I think, if you look at the spiders, there's a pretty big resistance coming in around 197.50 to 198-ish, which is around that gap from the post, the Friday after the Fed didn't raise rates. So I think the first trade traders are going to probably look to do is, first of all, if you're long into today because of the big reversal we had Friday, congratulations. I would trim at least a third into this up open and then see if we hold today's gap. I think what most traders are going to try and do is maybe, fade into 197.50 or 198, especially if we see it, today, and then, see if we can come off and feel a little bit more comfortable, buying versus chasing a move that started at 189.50 on Friday and is up above 197-ish or close to 197 today.
All right, Scott, I know you like to do your homework on your individual stocks and your technical analysis, very consistent in your methods, but just talk to us a little bit, like when you wake up in the morning, what markets do you look at? How much do you pay attention to the overseas, Europe or Shanghai? Not that you're going to make a trading decision solely based on that, but could you just kind of walk us through what you look at overall to get your analysis?
Well, some that follow me on Twitter, they see that I start tweeting around 5 in the morning because my alarm goes up at 4:45. So the first thing I do, and I also have in my notes, my first paragraph is just a quick take on overseas, because it does seem as if overseas, gives us an indication, or it does dictate where our futures are. So sometimes we lead overseas, sometimes they lead us. Like I think, Friday's positive response to stocks on a horrendous jobs report gave clues to overseas that maybe the downside there, could be a little limited. So you saw in Europe's up 2%. So when I this morning woke up, I was like, let me see if Europe followed our lead and was up 2%. And they also held their August 24th lows. And then I looked at Asia. Asia was broadly higher, so no lower lows there. So I'm like, okay, we're not going to get a headwind from overseas. So in my head right away, I'm like, we're probably up about 10 handles, giving follow through. And then I looked and we were up like 8. So it made sense. If all of a sudden I looked and Europe didn't care about our action on Friday and was down 2%, and Asia was red, I would have thought maybe, our futures would be down because maybe it had to do with option expiration. It had to do with just the funny business of the jobs report. So, it actually had a little bit of continuity because we closed strong, and that's what a trader wants. You close strong, you want to open up the next day. You open weak, you close weak, you want to open down the next day. That's what traders look for follow-up. So overseas markets gave us a little bit of a tailwind. And then, which they were oversold. So the question is over there, the next few, just say, sessions, is it just an oversold bounce, or does it also start to break above some resistance? Like, on Friday, we closed on the spiders at 195, which was the mid end of the range. So if you look, just say at the HEDJ, which is the ETF for Germany, which has been under a lot of pressure because of Volkswagen, it too took out a little bit of resistance, which came in at around 54.92 and is up today. So I want to see, does Does the HEDJ stall at around 56.29, which is the 21 day, which has been below almost for 2-3 months, or does it work its way, through that and then maybe sees 58, and then you can almost line that up with, 197 for the spiders, and then maybe 200 to 202, which is where we failed when the Fed didn't raise rates. So I try and connect all the dots, see if there's continuity, and see where the divergences are to see what could lead to what.
All right. Also, you talk about, or I talk about during the week and stuff, the red dog reversal here for some of our listeners that are new. You did get one in the SPY on Friday. Could you just walk us through that? The reasons you have it, what you look for, where your out points are.
Okay, so think about it. On Friday, the world had no idea how the markets were going to react to 140,000 print. All we knew was you had Wednesday and Thursday, you had two pivot lows. You had 189.44 in the spiders, and then on Thursday, you had 189.82. And on the first initial move, the market was below it. Okay, because I was short. I was short below. I was short like 189.70s. I was also thinking, okay, maybe now we'll get that undercut of that 824 low, which a lot of people wanted to see. But in order to get that undercut, you had to stay below 189.50 or 189.82. So, but within the first 30 minutes, all of a sudden, the spiders were back above 190. So if you were thinking we were going to get an undercut, the sellers had to have enough power to keep us below that double pivot. So right there, I pretty much covered, or I tried to cover a lot of my shorts. So then some guys might have been like, you know what? This is all priced in. We were just at 203 when the Fed didn't raise rates. You know what? They knew we were weak here, so we could rally here. So they might have used that 189 to say the average of it, 189.60 as an entry. So then they say, okay, I'm going to buy 189.60. You just took back the Wednesday, Thursday low. The low of Friday was at 189, 12 or whatever that was. So that is the stop. Okay, actually 199.12. So basically, you had 40 cents of support. Of risk. So you could have just walked away, turned your computer off, and said, okay, you know what? I'm staying long here, and I'm not even going to look. And then all of a sudden, you had 40 cents risk, and you made 5 points in the spiders based on just that tactic. Or, what Joe, look, 2 days before, there was that minor red dog reversal around 187.64, right? It pushed below 187.64, hit a low of 186.93. So right there, if you bought when it reclaimed 187.64, you had 70 cents risk. And did it ever break below that low of the week?
Nope.
Nope. So you could have been a swing trade. You could have sat in it, not given about the jobs number, and you'd be up almost 7 points in the spiders as a swing trader. If you just look at that strategy on a swing trading basis versus a day trading basis.
And you have an out. You have an out, right? If it goes back down.
Yeah, you have
that.
an out. That's exactly.
All right, a lot of people
traders need it out. Sorry.
That's all right. A lot of people look to the small caps as kind of like a leader of the market. Not a good performer here. It's a nice day on Friday here. Continuation closer to the flash crash lows than it is the flash crash highs here. What are you getting from the small caps? Russell 2000.
Small caps, I feel like a lot of us haven't looked as closely at it. It did undercut those flash crash lows, so it wasn't really a long candidate. I think, traders have been looking more at the IBBs because if you recall 2 Fridays ago when the spiders tried to take back 195, the IBBs went red and got hurt, and that dragged the overall market lower. And it tested that 284, 285 in the IBBs and held it. So on Friday when the IBBs went green well before the market, that also could have given you a clue to cover some of your shorts elsewhere and maybe look for other sectors to go green. And then when it took out that pivot there, you look at that 305 to 306 pivot, that showed that there was actually even a little power, not just, you could buy low and sell the bounce, that you could actually buy up and sell a little bit higher. So I think the IBBs on Friday gave a little bit more clues of the action versus the Russell, which has been a little bit of an underperformer and not such a obsession. Sometimes people obsess about the Russell, sometimes they don't. I think recently, because of the damage in the bios, that's been more of a focus, and that actually gave you some clues again on Friday. Cover some shorts, maybe put on some risk, and now the IBBs are getting close to 320, which is probably a spot that'll be some resistance. So if you did take the IBBs overnight, you trim some into there, and then we see how we hold up.
All right, let's touch on a few high beta tech here. Apple, nice day on Friday. Citigroup cut some number estimates on iPhones here. Got it trading lower here by 44 cents. Any take on Apple?
Apple since last like Wednesday has been more of a laggard to the market than a leader. You know, most traders when they like to be in Apple, they like it when it leads the overall tape. I know I've been watching it pretty closely and actually trading it, and it's been almost one of the last ones to be dragged up. And even on Friday, it didn't show the strength and it didn't go positive before everything else. So I think there's getting a bit more of a consensus that the 6S is not going to be the 6. And it's just a matter of kind of price that in because you know common sense wise, I know everyone that I know has a 6, and everyone went from a 4 or a 5 to a 6. The only people I feel like who are going to go to a 6S are the ones who are still on a 5S, and I don't even see anyone with those anymore. So how could the 6S be so good? So common sense says, if the numbers year over year aren't going to be as blockbuster, so the market has to get a little comfortable that that's the way it is. So the more downgrades or the more reduction in the handsets or in the amount that people are expecting, the better it is for the stock because it brings down expectations. And if the stock doesn't go down much on it, then maybe it gets a little bit better. But for right now, you did get a little reversal on Thursday, a little red dog reversal around that 107.86 pivot. It did go green on Friday, so I think we'll watch it today because, if Apple goes from down 40 cents to, down $1.50, it'll probably mute some of today's enthusiasm. But if it goes from down 40 cents and goes green, I just think that it'll be put on the side. It'll be a non-event, and money will be spent elsewhere. And it does seem like some catch-up is happening with some of the energy names, especially after Friday's move.
Bobby Biddy wants to know if you have a favorite for the Ironman World Championship in Kona this weekend.
I don't, but I will be watching. And one of my friends, Dr. Todd, is actually out there. He's he's going out there and making sure that everyone is ready to go. He's a chiropractor and ART guy, and also we have someone from MAPSO who's competing. Her name is, oh my goodness, Christine Kaminsky. Look out for Christine Kaminsky. She's in the girl field. She's not a professional, but she's a professional, but as far as in my eyes, she's a wife and a mother, and she works, and she's in Kona, so good for her.
All right, so you guys have a finance festival coming up in November. You want to tell us about that?
Yeah, it's November 6th and November 8th. It's in Miami. I think it's going to be an unbelievable event. I can't even, we have over 20 plus speakers from all sorts of life. You have Dow theory speakers, you have technicians, you have writers, you have big economists. It's like whatever you want to learn about, you can learn about. Josh Brown from Fast Money is going to be there. You have Santoli's going to be there. You have I can't even name all the names, but I think the important thing is it's going to be a cool event where we're going to be there Friday through Sunday. So not only can you learn from us and go to the breakouts, we have a huge dinner plan on Saturday. We actually have the VIP dinner plan Friday night, which will be great. Saturday night, I think we have a room in the hotel that's going to be made into a club with drummers and different alcohol sponsors. And I think there's going to be events during the day. I'm going to actually try and plan a run for people. So it's going to be like one of those events where you can learn a lot, but you could also kind of rub shoulders with guys that you've been following on Twitter or following on TV for the past decade, and everyone's going to, have their tie down and, talk about what's going on in the markets, what could happen next year, and just what makes them successful and how they go about their routine. And, maybe it'll help give everyone some clues on how to, just put themselves in a position to win because, again, we've seen so many times that you can have the right idea and not execute on it. You can have the wrong idea and get crushed. Or you can have the right idea and, not give yourself enough wherewithal to make it, through the slower times in order to get there for when your ideas actually get confirmed by the market. So all in all, a lot of guys who have made a lot of money in the market that have withstood the test of time in one place, hanging out, having fun. And, I would think that if you have free that weekend, you'll see the post that gets up there. I'd love to see you guys there, and so would everyone else.
Scott Red Dog Redler, Chief Strategist at T3 Live and T3 Trading Group, joining us every Monday for his outlook on the market. Scott, thanks a lot. We'll talk to you again soon.
Thanks for having me. I'll see you then.